Welcome to the Millionaire Mindcast, where we broadcast weekly interviews with millionaire minds from across the globe to empower you on your journey of unlocking a rich and fulfilling life. It's time to unleash your millionaire within. Now, here's your host, Matty A.
What's going on, you guys? Welcome into today's Wealth Building Wednesday. We got a new streaming deck, actually, so we're going to be taking some of the production to, at least on the podcast, to the next level. Yeah. So we're excited about that. We got lots of market update news for you guys. Happy Memorial Day. Big shout out to all of our service members that keep us safe and fought for our freedoms. Got a lot of love for the people that have sacrificed a lot of shit. And we're over here complaining. You hear a lot of people complaining, right? About having to stay at home and having to do a lot of these things that ultimately are, in the big scheme of things, in the history of what has got you to have that freedom in the first place, is not a big sacrifice at all. So just some perspective. Big shout out, though, to all those who really have made true sacrifices, to get us to where our great country is at today. So definitely sending a lot of love and prayers and positivity to the family members, active, past servicemen and women of our country. So big shout out to you guys. If you're new to the show, be sure to text us at 844-447-1555. Say what up. Let us know where you're tuning in from. If you have questions, be sure to send those over. We need to put this guy to work over here.
Yeah.
Put this guy to work over here.
What are you guys doing?
So we got
a fountain of knowledge. I want to say wealth, but I don't want anybody to tap into the bank account or anything.
So some interesting stuff going on in the market this week, some new updates. So we'll be covering that for you guys. Real estate, mortgage forbearance, commercial real estate, all kinds of good stuff. I know Ryan's going to talk a little bit about what's going on with oil and the equities market and all good stuff. But dude, we had some sports this weekend.
I know. I actually watched NASCAR last weekend.
You watched some NASCAR?
I
was watching on ESPN the Ocho dodgeball. That's how freaking
I've been watching the beanbag.
Oh, cornhole. Yep. Cornhole. Yeah, but they had Tiger Woods and Peyton Manning beat Tom Brady and Phil Mickelson. That made me happy.
Yeah, me too.
That made me happy.
Tom Brady losing always feels good.
Yeah, it does. To all of our Bostonian listeners right now.
Well, it's a Tampa Bay.
Well, now, yeah.
Yeah.
But they're ringing with Tom Brady till
the wheels fall off.
He's the man.
Y'all are just like Giselle.
Yeah, I love Giselle. Had somebody die in front of our hotel this weekend.
I remember getting that phone call. I remember we were supposed to meet up that day at around noon, and
that was pretty crazy.
You called me and you were letting me know that you weren't going to do that anymore, and somebody got kablurkened right in front of the...
I've never heard a death called a kablurkened.
Well, in my world, that means something heavy and quick likely struck you.
Yeah, it got kablurkened. It was sad, first and foremost.
No, definitely. I couldn't believe that had happened.
It was literally right in front of the hotel on Highway 50 where we had a police officer. I get notified. We have security cameras all over the hotel. And a police officer was kind of roaming around the complex. And I was like, hey, can I help you? And we saw that you had security cameras all around your building. And somebody just got struck and killed. A pedestrian got struck and killed by a drunk driver. Yeah, so... that was unfortunate, kind of wild, it just makes you think how fortunate we are to have our health and just random things in life, right? You just never know. So that was an interesting thing that happened this week. And I know there's obviously some interesting stuff that's going on when it comes to your guys' wealth. We're always bringing you guys updates and things that, impact your money, impact your financial freedom, impact the path of, unlocking more wealth and more income for you guys. Any news on this updated stimulus plan?
From what I hear, it's very much the exact same as the last plan. It's not $3 trillion. Everybody keeps saying it's $2.3 trillion. There's a lot more money, less money for small businesses and loans. And more money for the individual consumer. So Still going through that with a fine-tooth comb. I haven't got our analyst report on it yet. I am busy working on making sure your guys' money makes money. And so I have people that read those reports and give me summations of them.
Mm-hmm.
I haven't received my summation yet. I likely will get it on Wednesday or Thursday of this week. But there's been a lot of like memes going around of like Jay Powell, who's the head of the Fed, just printing money.
Money go
Money print to go burr.
Money print to go burr.
That is kind of, for lack of a better explanation, they're throwing money at the problem right now in hopes that will quell the worries of people. And so far it kind of has, and the market is responding somewhat good. Trading volume is a little bit thin as we move into this new trading week after Memorial Day weekend. Generally speaking, trading volume is thin going into an extended weekend. Futures markets are looking really good right now, like really good, not just a little good. So it's just, there's still a lot of, like I mentioned a couple weeks ago, we're not quite 100% out of the woods yet. But we did, as a group for our clients, layer on more equities and equity exposure. And we had a really, really, really great week last week. I think my average client probably made about 4.5% last week.
Nice.
So,
and now to kind of touch on real quick, tell the listener and right, from an average investor perspective, why pay attention to the futures market? Like being that it is strong, being that it's kind of forecasting certain things. Yeah. What do you guys look to in regards to the futures market to tell you, and how does that impact what you guys do with your clients?
We don't make any trade decisions based on the futures market, because it's very intangible what's going on there. But what it is a good barometer. It lets us know kind of what the majority of hedge funds, small, medium, and large traders are doing with their money, because most of the people that dabble in the futures market are going to be sophisticated investors, because those are options most of the time, options, long and short, and also straddled, which means you're playing both sides of the track. And so we look at that, and so does everybody, as a good indicator of what might happen. But as a full disclaimer, the futures market has been super high, and then the market opens and it snaps down, and vice versa. I remember a couple weeks ago, I popped open in the morning. Futures market was down like 2.5%, was forecasting the Dow to open down 2.5%. The market opens back up at almost 1.2% up. So again, it's not perfect, and there's nothing that really is, but it's a barometer to kind of one of those things that we bake into kind of our expectations on, okay, this is what's going on. This is what we maybe can expect, and kind of to just get ready. So it's the equivalent of the forecast.
That just kind of gives you a little bit of a
it gives you an idea of where you think things might be in a very general sense, because it's so many data points working at one area. Just a tick on one can completely throw it off.
Yeah.
So I compare it just to the forecast. It could say it's going to be 75 and it could be 72. You still knew it was going to be in the 70s. So that's kind of the way that we approach it. But right now, like I said, futures market is pointing to a good opening tomorrow when we do have the market open. So time will tell, but I'm very bullish on the market, as I have been, because I am a bull, perma bull. But I think we were talking SFRs are looking really good. Single family residence is very good. Home sales, although down because of what happened, are still pushing strong through the coronavirus pandemic. And I think what we were talking about earlier, I think commercial real estate is really going to be the area that is going to feel the brunt of this, especially with businesses now talking about, hey, we're doing this with half the staff not in an office. Why are we paying this rent? Mm-hmm. Why are we renting this building? And I mean, places like, Cushman Wakefield, big.
You're going to see, it's going to start at the top, right? Your big box and retail, your big hotels and hospitality. There's going to be a major trickle down in the commercial market. Just to give you guys some updates on that, you guys know, we just track the data. We try and gather as much data, just like Ryan talked about in the futures markets. It's just a bunch of data points that ultimately give them, right, the ability to put it through their own filter and make the investing decisions or not to invest, right, based on what that data might be telling us. So with that being said, we're just tracking a lot of this data to give you guys more input on what you can put into your own investing decisions as well. With that being said, talking about some commercial real estate here, you said that being hit the hardest.
Yeah.
It is getting hit the hardest right now. Definitely. I'm experiencing that just on a smaller level, right? In some of my commercial strip centers, we've actually had a couple of our businesses say, we're not coming back. Ultimately. So we're now starting our turnovers on some of those, right? So there's going to need to be some reoptimizations on a lot of those types of assets. And when you talk about the larger ones, there's some bigger implications here that, right, one, create opportunity, but also through that hardship, there's going to be impacts in communities, in individuals, in businesses that will have, right, a bleed over into other areas of, sector and industry. So with that being said, we got late payment spike. This is a Market Watch report. Late payments spiked to nearly 12% in May when it comes to commercial real estate. So there is now, this is a big number, $32 billion worth of commercial property loans in quote unquote special servicing. So it's kind of the equivalent of, let's just say, forbearance or some kind of
like the
plan,
step before, right?
Right. Yep. Yeah. And that's as of May. And we're obviously not done with the month of May. And that's more than double the late February tally when the coronavirus deepened its hold on the U.S., according to a new Moody's investor report. So something to pay attention to.
Yeah, and Moody's, just so you guys know, their main thing is they track debt. That's what their gig is. S&P is creditworthiness to meet debt obligations. Moody's generally will give you a how high quality is the debt that you're holding or issuing. So a Moody's rating is very important. It's also here's a little nugget. If a company does not have a Moody's rating, it means they do not carry any debt. So I have this little nugget from heaven for you.
There you go. Mortgage forbearance update. We've been tracking the forbearance curve. It continues to flatten and slow down a little bit. So the number of homeowners in mortgage forbearance does continue to increase, but it's not increasing as rapidly each and every week. So last week was 4.7 million. Now we're at 4.75 million as of May 19th. So this is 9% of all active borrowers nationwide, represents a little more than $1 trillion in unpaid principal. But Ryan and I were talking about this. This is something that they are exploring in this stimulus package right now. If you want to, go over what the banks ultimately have been somewhat communicated, through the Fed.
Yeah, so pretty much what banks have started to say, which leads me to believe that they're going to then give us something more concrete, is, hey, if these, just so you guys know, and this is the Federal Reserve and central banking system, the government talking to our lending institutions, hey, if you have people missing these payments, go ahead and let us know, and we're going to work with you to kind of make that up, because we have something in the works that we're going to kind of present, and it's just not done yet. And I think the reason they're doing that is to prevent the banks from making a concrete action and sending the consumer confidence down. And so normally, and I'm going to give you a 10-second on this, when banks have money at the end of the day, they have what are called reserve requirements that have to be met. They have an amount of money that has to be held in their coffers at the end of the day. If that amount is not met, banks lend to each other on a 24-hour period just to cover that, so their reserve requirements are met. That's called the Fed funds overnight rate, and they pay a 1 to 1.5% on 100, 200 million, $30 million. So being able to not have to take that money on, because this is what will happen when banks aren't getting those payments, they will not be able to meet their reserve requirements, and they'll have to take loans from each other. And what happens is the small banks can't keep up with the bigger banks. The bigger banks ended up just making tons of money off smaller institutions like credit unions on that. So long story short, I think the federal government is giving us a sign that they're going to allow forbearance, and they're going to do something to kick it towards the back end of the loan. That's the only way that we can avoid a crisis in this, because I don't care what anybody says. Just like you can't just swing a wand and get rid of student loan debt. It just doesn't disappear. Money just doesn't come from nowhere. And when we have $1 trillion of unpaid principal, that money's not just going to be like, poof, here's $1 trillion, everybody. That, that's 1/3 of the stimulus package, or 50% of this second one.
Yep.
So I think what's going to happen is we're going to get something that says, hey guys, we're going to work this into the loan, put it on the back end, take the payments, and we'll pay you off over the long term.
Do some kind of modification, or what we're at least starting to see potentially become the narrative is that it's going to become deferred to the back end of your loan, right? So, and that's a big deal, because
don't go out and make any action though. Don't do that based on what we think.
Well, this is all again
speculative.
Yeah, there is nothing that is currently in writing, right?
Nothing.
But we're just saying, hey, based on some of the conversations that we're seeing and news that's coming out, that is something that could become what they decide to do. And that is got major implications in the sense of that could prevent a lot of distressed inventory from hitting the market. That could prevent a lot of hardship for a lot of people, right? I mean, we're talking, $1 trillion and unpaid principal. We're talking about a significant amount of people, 4.7 million mortgages there, 4.75. That's a lot, right?
Yeah.
So with that being said, it's been interesting because we're seeing the real estate market actually hold strong right now. And you said this earlier of this correlation between, right, the stock market and real estate.
They're normally uncorrelated. Really, what's more correlated is like the bond market and real estate, because debt, your mortgage, there's probably a mortgage-backed security written off of that. It'd be a fixed income security. So you have to understand that. I'll say this for the 1,000th time and beat this horse until it's got holes going through it. 2008 was not normal. That was not, stocks going down and housing prices going down was not normal. And the best thing about it is 7 years earlier, and really 5, we have 3 years of solid data to prove that the real estate market went up all 3 years in a row during the dot-com bust. All 3. Whereas people lost 47% of the value of their invested assets in the stock market during that time. You cannot forget about 2008.
They don't run parallel together.
They don't.
Right?
They just don't.
They can, as we saw in 2008, but that doesn't mean they always will.
No, exactly. Just like in 2015 when interest rates were adjusted at the end of the year, bonds, stocks, and real estate all lost money. That's not supposed to happen. But it will sometimes happen. We have little spikes.
Yep.
So just, one thing that I caution my real estate investors, don't be a lame-o and just spew something you hear somebody say, or see like some money guru that doesn't know anything about what they're talking about. Oh yeah, the stock market. I mean, I see all these real estate investor guys post stuff that literally, stick in your lane. But don't go saying, put your money into appreciating assets. And then I see somebody post one of them being gold. It's like, come on, bro, chill. I'm not out here telling people how to write up a wholesale contract or do a pro forma. But I will tell you, just talk to an advisor, talk to Matt or somebody like Matt. If you need to talk to your real estate, stick with the professionals, because if you just cut out the BS, it will save you so much money and time. Because if you listen to any of the market pundits 3 months ago and pulled all of your money out of the market, you would have lost like 60%.
Yeah.
Where we're about to retest the 200-day moving average this week, folks. If we break through that 200-day moving average this week on the S&P 500, you late to the party. We bottomed out March 23rd, like I said, and like I've been saying. You got to start listening to the professionals. If you're tuning into this podcast and you're hearing Matt say something about the real estate market, or you hear me say something about doing your investments, and it goes in one ear and out the other, you may want to go talk to the man or woman in the mirror, because you're wasting your time. When we give you these tidbits of information, you should act upon them, because the people that we brush shoulders with, Matt brushes shoulders with people that are so far above some of the people that I even know. It's incredible. And he's the most humble guy about it. So just note that.
Vice versa, buddy. Right back at you. It's that's why we surround ourselves with people that are way smarter, faster, stronger, and equipped and resourced than we are. And obviously we're just quick to assess, analyze, and implement based on what our goals are. And that's what you should be doing too. So if you guys need to talk through some of these things, you got somebody right here, Mr. Breedwell, that does
$99
financial x-rays for free. And I can't tell you guys how fun, honestly, it's been to watch so many of our listeners like you who have called in, connected with him, set up appointments. Big shout out to all of you who have. Many of you have decided to work with Ryan, but also seeing how many people don't know how much money, one, they're losing or leaving on the table or getting charged. And it just makes it, for me, it was really interesting because of the, I don't know if I would call it like non-transparency. I think it's just,
that's a good way to say it.
So many people don't know what they don't know until you have somebody that is on the other side that knows it all and can be actually honest about just having an honest conversation and assessment of what you're actually in, what you're getting charged, and if it really aligns with you. For example, I have a policy that I don't know, it's got like what, $7,000 in it now.
You're like
I got some random,
Roth.
I didn't even know I had this Roth IRA. I don't know where I contributed this money from, but it was only like $7,000, something super small. But I give it to Ryan. He's like, "What? This is the most underperforming, underwhelming, right?"
And one investment.
It's like, so with that being said, though, I consider myself to be pretty sharp in some of these areas, and it's not my lane, and that's why you got to have somebody who's in your driver's seat, co-pilot with you, right? Making sure that you're not steering off the road or going into other lanes that you shouldn't be, and going as fast as you possibly can in the direction you want to be going. That helps you achieve those goals. So with that being said, take advantage of that, right? So if you want to set up a call time with Ryan, text us 844-447-1555, or just reach out to him at Ryan Breedwell at capitalplanninggroup.com, capital with an O, capitalplanninggroup.com, Ryan Breedwell.
And, one of the other things that I would say is, because I was just about to bring this up, because, you're over here saying that I know stuff. Matt brought up something today that was very interesting. And you were talking about like the velocity, like inventory is down, but home sale velocity is up.
Yeah, absorption.
Thank you.
So here's a good stat for you guys. And this is based on Redfin. Redfin is probably one of the best, at least in single family data providers out there in the market. And Redfin reported that 41% of offers were subject to a bidding war over the last month, suggesting demand is outpacing supply.
There we go.
And so what we're seeing is the velocity is still there. Now, after stay-at-home orders were enacted, new home listings dropped drastically. Obviously, makes sense. Why, right? But that was as much as 80% year over year. Whew. So a lot of people were going, and I'll raise my hand. I always reserve the right to be wrong. I was thinking, man, there's going to be some people that are going to panic and want to, cash in on their equity. And I still reserve the right to say that will happen, because we're still very early in all of this. I still think there's going to be some hardship. I mean, let's go back to these numbers real fast, right? 25 million people unemployed.
Yes.
Which you can't deny that there's not going to be some hardship that's going to trickle into different sectors, and real estate being one of them, right?
Yeah, and I think this may be for another show, but I'm going to tell you right now, there's not 25 million people unemployed. There's just not.
And talk about that real quick.
The old saying is true. Numbers never lie, but the people behind the numbers do. And so I could name 5 people that are very insignificant. They're just people that I know that had to get on unemployment for a couple weeks, are back working at full-time jobs, have told unemployment they no longer need the benefit, and their benefit is still getting paid to them. That is a skew on the numbers in a negative way. So what you have to ask is, if there is really 25 million people unemployed, which would be one of the worst ever since the Great Depression, why is the economy doing what it's doing? Why are businesses still reporting positive earnings? It's because people are taking that money and they're spending it because they don't need it. So you're going to see, that's why consumer confidence, mark my words, when it comes out this week, will be higher. That's why when housing starts come out this week, mark my words, they will be higher. That's why GDP is going to be at 4.8. It was projected to be it'll be at 4.8. They know what's going on. So I'm not arguing that there's 25 million unemployment claims. That's a fact. But I am arguing that a large percentage, probably more than 25% of those people are taking that money and don't need it.
Yeah.
And I'm not mad at them for that. I'm not saying that's a good thing to do. I'm just telling you guys, it doesn't line up. It just doesn't line up.
Yeah.
So that's my personal opinion on that.
Well,
I think it's closer to around 18 million people are actually unemployed.
And it'll be interesting because and my concern is the negative impacts this has on the psychology of the average American, right?
Absolutely. Get back to work, guys.
Yeah, I mean, there's a lot of people that are going, I don't want to go and do this because I'll lose those unemployment benefits. People are kicking the can down the road on starting a business or bettering themselves or educating themselves or doing things right now where they're almost being incentivized by the government to not do shit, to lean on the government even harder because they don't want to lose out on some, $1,000 a week. Yeah, I get that's big money for a lot of people. And at the same time, right, if you're one of these people who's listening to this right now, you have way bigger goals than making $1,000 a week.
Yeah.
Right?
And how dare you bend over, no dinner involved, to somebody telling you you're only worth $1,000 a week. If somebody told me I was worth $1,000 a week, I would laugh. I would absolutely laugh. What happened to people being an advocate for themselves? What happened to people? The American dream, the whole reason people, America is what it is today is not because the government said, hey, here's a handout. It's because the government said, hey, here's the opportunity to be whatever you want to be. We got your back if things go wrong, but you can be whatever you want to be. What happened to people abdicating for themselves to make $50,000, $60,000, $70,000 a week? So then you can take that money and you can give it to somebody. Human kindness is really what's supposed to drive, that kind of stuff. We're not supposed to rely on the federal government in times of need. We're supposed to rely on our neighbors. I have a good friend that was having a rough time through this. Really good friend. I just gave him $1,000. I don't need any money. Hey, this isn't a loan. You'll get me back whenever you need to get me back. Here's $1,000, man. I don't need this money right now. You do. You need this to pay your bills, and I don't want you to rack up credit. I know you're a good person. I know you're good for your money. I know you're just going through a rough patch. Let me give you this $1,000. That's what's supposed to be happening. Not, hey, let me rely on the federal government so I can, because what's going to end up happening, guys, is everybody's like, oh, Sweden, they did good on the lockdown. They did. Look, they have all these basic benefits. Their tax rate's like 75%.
And look at the size of their population.
Their population is under 3 million.
Yeah,
it just doesn't work at the scale. So the American dream is still alive. I know inside of me. I know inside of Matt.
I'm excited. There's a lot of stuff cooking right now. And
you need to be advocates for yourself.
100%.
You need to advocate that you are not going to allow some pandemic to define you and us as a people and a culture moving forward. We need to get through this together. You guys need to get back to work. You need to put boots on the ground. And that's really what's going to drive this forward. Because that's what I'm doing. I'm not sitting here just saying this like I'm pissed off from my pedestal. I'm working my ass off day in and day out.
Yeah, I was going to say most of the people I know that are, are movers and shakers right now, they are, with big goals and big dreams, they're not sitting back chilling right now. I can tell you that much. And I think the mentality for everybody listening to this show right now should not be in, quarters and months. It should be in minutes and hours. Like the velocity of what you should, at which you should be moving, at which you should be thinking, at which you should be networking, at which you should be trying to learn, grow, build something new. Velocity wins in our world right now. And so if you're somebody, right, that's kind of looking to take it easy in whatever area of life you're taking it easy in right now, I'd challenge you on that. It doesn't mean that you can't take time to recharge, take time to spend with the family or to do the things that are important, because there's been a lot of reprioritization and also structuring of routines and habits in life, as we know, because we've been forced to, and there's nothing wrong with that. Right? But at the end of the day, it is one of those things where move quickly when you're in the time blocks at which you are operating within, because velocity is going to win in this game.
Yeah. And the thing that you have to keep in mind is there's not just me and Matt sitting out there ready to take advantage of this. There is the guy next door. There's the woman down the street. There's your friend that's reading that book that he told you about that you're not looking at right now. There is somebody out there ready to take the next step, and you have to just stop putting these barriers in front of yourself. And again, growth zone. Months ago, I talked about it. If you are uncomfortable, but you're confident in the areas that you're moving forward and you know you have a good base, welcome to the growth zone, folks. Nothing was ever easy, ever. I love talking about Walt Disney, mainly because he used an insurance policy to start Walt at Disneyland. But the other thing I will tell you is, if you read his personal journals and diaries, he was deathly afraid of what he was about to do, because he was taking a zoo and turning it into a theme park, something that had never been done before. And if you read his journals, you will see he was scared. He was full of doubt. And now one of the most recognizable characters in the whole entire world is Mickey Mouse and Minnie Mouse. And they're a powerhouse brand. That was all done because he took the step to be uncomfortable, to do the big thing. And people are going to doubt you more than they support you. And that's because you're doing something that's not recognized, not known. And when people are like that, they're going to doubt you. But don't let it hold you back.
Well, you're a contrarian for a reason, right? You're not meant to conform.
Yeah.
You're not meant to believe what everybody is meant to, quote unquote, believe, right? And that's ultimately, we are free thinkers. We're free thinkers. We're big thinkers. We're big doers, right? And so big shout out to everybody out there right now that I know many of you who've been texting us at 844-447-1555 are putting in the work right now. Putting in the work right now. So I want to hear what you guys are up to. Ryan wants to know what you guys are up to. If you have questions for us, text us 844-447-1555. Before we wrap up, oil, any updates on oil?
Oil is still doing hot. I mean, we're rolling into summer, guys. You don't need a crystal ball. I found out who sent me the crystal ball, by the way.
Who?
My client. Shout out Sean Wire. I'm going to say your name on here. I hope you're listening this week. He sent me a crystal ball. He would be able to tell you why, but we made some good moves based on some predictions by yours truly. And that was a good one. So sorry I brought that up. Anyway,
love it.
Oil market's doing good. Barrels are back up around $35. West Texas is looking hot to fire.
Hot fire.
Don't go dump all your life savings into oil. Like I said weeks ago, if you would have done that, yeah, you would have made some money. But again, you're not speculative investing. We're long-term. That's what we talk about in here. So oil's doing good. We're going into summer. States are opening back up. They're going to drive their cars. They're going to get on planes. I think oil is going to end fair for the end of the year. Shout out Mr. Anthony as well. Hope you're doing well, buddy.
Mr. Farrar, Mr. Oil, big shout out to you, brother. With that being said, guys, if you want my free investing course on how to capitalize on the real estate recession without any money or experience needed, how you guys can find these deals, analyze these deals, fund these profitable investment opportunities, whether you're new, whether you have no money, whether you have all kinds of money, it doesn't matter. There's just 3 simple things. I created a very simple, fun, free investing course for all of you guys that want to jump in and start kind of getting your feet wet, right? Maybe you're not at that next, intermediate level yet, but you want to get started, have a good foundation. I show you guys, eliminate all the extra noise and just focus on these 3 things, and that will lead you to finding that first investment property that meets some of your investing goals and starts, right, that ball rolling in the right direction. So you can get that for free by texting INVEST to 844-447-1555. We have our upcoming October Wealth Camp. Woo. More details on that. You can get information and submit an application.
It's gonna be fun.
Text the word Wealth Camp, one word, no space, Wealth Camp to 844-447-1555. With that being said, tune in next week. We'll have more news and updates for you guys. If you have any questions, be sure to send those in. Keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.
See you guys next week.